Good evening, everyone. This is Srikanth Rajan, and welcome back to Market Pulse. And finally, yes, I am back on video as I'm back in India. All of you know I'm back in India. I'm back at office, and of course, things are much better as the bandwidth here is much better. Well, of course, not that the Dubai network was bad. Dubai network was good, but unfortunately, there was some issue with YouTube when I was using it in the Dubai network, and it was not allowing me to give clear videos. So I had to stop that. So now things are back to track. Okay. Coming to last week was a very volatile week. In fact, it started off with the market going running higher, but then from there, a fall. In fact, one interesting thing to note, FIAs have been continuous sellers last week. So, of course, this is a market pulse where we discuss about what happened in detail last week and then also what is our expectation for next week. So, let us get going talking about what happened last week. So to start off, the first thing that actually hit the market was the news positivity about HDFC Bank. So in fact, HDFC Bank had procured the highest market share in the Indian banking sector, which was earlier held by SBI. And as that took over, we could see good positivity in HDFC Bank. And that was a great news as the merger of HDFC and HDFC Bank started. So that was something good. So from there, we could see some power in HDFC. But then immediately it was a slowdown for the PSU banking sector because SBI came down from first position to second position. So that was why we could see some weakness in the SBI and overall the PSU bank sector as well. Apart from that, China came out with their revival policy for their economy, and that kind of gave added positivity to the market, global markets. We could see commodity prices or commodity stocks also going up across the globe, and that gave some more push to the Asian markets, European markets as well as the US markets. So overall that again added positivity, but then that is when things started changing. So if you look at a few important things, the auto sector is something that actually has been doing really well, especially last week if you see Tata Motors. In fact, Tata Motors, we have discussed this multiple times earlier also. We have discussed that the best way to invest into Tata was the DVR mode and not the regular stock mode, and that all those members who are holding DVR, we had a really exciting week last week as DVR has the write up of almost 14% last week after the Tata Group announced that they are going to convert the DVR shares to a regular share. And that was something really amazing, and we could see some good profit coming in. And apart from that, some of our favorite companies like L&T came out with good results, and Axis Bank, Bajaj Finance, Bajaj Finserv, all of these came with good results and again supported the market at all these points. We also had the Federal Reserve talking about the US. So Federal Reserve meeting and the rate hike was there, and as expected, they increased the rates by 0.25%, which was absolutely under control. And also the comments that came in from Jerome Powell was something very dovish, which again helped US markets recover. So when the US markets recovered, Asian markets were also looking good, but then somehow Indian markets started falling. So there was some major profit booking seen. IT sector, which was trying to recover, started getting some negativity after Infosys results, which was not that great. Similarly, Tech-M results came in last week, which was not great. So overall, IT sector sentiment again vanished into thin air. So with all this, we could see that Indian markets are in a jinxed mode. In fact, they are neither rallying up, neither falling down. But very important part is last week we had discussed about this important range that was 19,500 to 20,000, and the best part is market has actually respected that range and has expired within that range. It was a monthly expiry as well. Being a monthly expiry, the markets were really volatile, and on the day of expiry on Thursday we could see the market actually trending downwards. In fact, at one point of time it even looked like probably it could hit a low of 19,500 and more, but then it did not. It took support at 19,600, went up. Again on Friday, there was some sell-off that was expected, and the markets have settled down. So as of now, for this week, I would say it's the start of a new month. So the last month expiry has completed. But then interestingly, if you note, last week, the FIAs were continuously selling big. Big in the sense not too big, but of course bigger than what they were buying. So at this point of time, they were sellers almost every day. Even yesterday on Friday, they have sold for almost 1,600 crores, 1,000 crores, and DIAs are bought for 1,600 crores. So it looks like DIAs are using the opportunity of buying the dip, and they are going good at buying that, and that has been doing well in the market at this point of time. Now, is this a point of concern? So now let me tell you something very important clearly. FIIs also have a lot of questions in the derivatives market. Now, as they know that they are going to invest fund into the market, they know that Indian market was going to go up. So based on that, they would have added some a lot of questions in derivatives market. Now, as the market was coming to expiry, they had to control the market so that their positions are in profits. And that's exactly probably what they did by selling with all such major buying in the start of the month. Some selling at the last week is completely acceptable. But now, very important thing to notice, after the expiry, monthly expiry, or as the new series of August starts, how are they going to perform? So that is a very important thing to keep a note on. Now, let me tell you something very important. Every time the market has fallen, the market has rallied up. Last time, why did the market fall? Russia war? No. Russia war was long back. After that came in the US inflation. US inflation came up and that kind of started breaking the markets. And that was a negative news which actually brought the market down. Now, that is kind of getting over. So it's almost the final stage, I would say. So at this point of time, markets have rallied and that fall has been compensated. So probably we might see some more rise, but then yes, that has been compensated well. Now, until there is something new, the markets are going to continue to stay in the similar range or probably go up slightly higher, but until a positive or a negative news comes in. So if positive comes in, markets can rally further. Now, if there's something negative that's coming to the market, then that could actually lead things to lower side. So if you see, nobody expected Corona. When Corona came in, market went down, then rallied up multiple times. Then from there, again, Russia war was not expected, came down and it went up. When after all these things, when inflation went up, there was again something not expected. Again, the markets fell down and now they have recovered. Now, then what is the next unexpected thing that's going to happen in the market? That's something which causes fear in the market. See, of course, there are a few instances that's going to come up in India. For example, the India elections are coming on. The next election is going to come in. So that could be a concern, but that is again a local concern. And many people know about it. So always remember this. Whenever there's a known reason for a market to be hesitant to go further, markets don't fall much. Markets fall only when something uncertain, something which is unexpected comes and hits the market. So at this point of time, there is no such thing that has come. So the markets are going to be stable slightly and probably can move up slightly. But then until bad news or good news comes in, the markets are not going to see a big movement at this point of time. Now see, 20,000 has not hit, but 20,000 now just remains a number because we've come very close to 20,000 and the market has taken some correction from there. That is completely okay. So this is the situation at this point of time. So this was about last week. Now talking about this week. So it is start of a new month. So naturally a lot of data coming in. The services PMI data, the regular PMI data, and also the inflation data. All these data will start coming in. Along with that, there will be auto sales. Now that is one important thing to focus because auto stocks have actually rallied really well. Tata Motors came out with good results. Ashok Leyland came out with good results. All of them actually have rallied well. So it could be time that people can actually think of, starting to book some profits. Now, second thing, if you remember, which we had discussed in few podcasts back was, of course, the next big person who can take the market up or down. That is none other than SBI. So SBI results are expected on this Friday. So markets would be in focus majorly on SBI. There are a lot of news around SBI. First thing, of course, their NPA has been reducing over a period of time. That is good. But coming to the negative part, SBI has lost market share and given the first position to HDFC Bank. That's a negative. Similarly, there are news around that SBI NPA might slightly go up or the profitability can slightly come down. So that could be a slight negative. So people who are sitting with good profit can actually think of booking some profit there, and there can be some wild movements in SBI. So that in turn will also affect the market. The next important stock to actually affect the market is going to be the ITC. So ITC results were supposed to be coming last week. I think now it's postponed. It's coming tomorrow. So ITC would be in focus again. There are a lot of news again in ITC demerger of hotel and other business has been in talks. And similarly, ITC has rallied up too much. So people are sitting already with good profit. So all those things can be a concern in ITC. So now tomorrow we can see how ITC performs. That could actually take the market higher and lower for some time. And then the next heavyweight who can take the market control is none other than SBI. So at this point of time, this is something to be watched. These are two sector. Also, ITC will head the FMCG sector, and SBI results on Friday will lead the PSU bank sector. So PSU banks overall have actually had a very big run in the last 1 year. So with that, there are chances people would look at some profit booking there before the results come. So these are also few things which can be expected. But if apart from all this, if at all SBI comes with good results, of course I'm expecting decent result, not a big good result, but decent result is what I'm expecting from SBI. If at all comes something better than a market expectation, they could actually take the market higher. And similarly, looking at technical, 19,500 on the lower is a very important support. If broken, can lead to further falling down. So for this week, I'm expecting the market to expire between 19,400 and 20,000. So this is the expectation for this week. Let's see how the market moves, and based on that, we'll be taking some trade. In fact, last week was good in terms of some returns that we made, and also we took some new trades for the next week, and that also has kind of given us good return. So overall, it was a good week when I was returning from Dubai. So things have been good in the trading part as well. As far as investors are concerned, this dip is something which is looking good for adding some fund into the equity sector. So do look forward to plan your investments. If you need help and support and guidance, it's completely free, of course, available at MPI Invest. All you need to do is connect with us on the number mentioned here on the WhatsApp, or you could say click on the link in the description of this video, and definitely our team will help you with that. So with all this, I think for this week, the major focus would be on the important data coming in from the government as well as India as well as US. And second would be on the results of ITC and SBI. So these are major things to be looking at. Expiry wise, this is going to be the first expiry of August, so not much to be actually bothered about. But of course, the third focus point would be the FIIs. Will they continue selling? Will they start booking profit? Or will they hold on? So at this point of time, I really don't feel that FIIs will be going on a big profit booking mode because they already have lost an opportunity when they stayed away from Indian market during the US inflation and rate hike fiasco. So now that they've got into the market, they might look at kind of holding on to the market at this point of time. That's my expectation until there is a big negative coming in. So these are few things which can actually kind of take the market up or down. So this is the expectation for this week. Let's see. And before ending the podcast, like I told, the important levels to watch will be 9,400 on the lower side and 20,000 on the higher side. So let us expect the market to kind of expire within this. But like I always say, we only anticipate the market, we don't predict the market. And this is what we anticipate. If at all market goes against our view, we still kind of hit a small stop loss and come out of the trade. That's what we do. So that's it for now. This is Srikanth and signing off. Focus on ITC and SBI. Have a great week ahead. For MPA family members, let us catch up on the meeting at 7:30. Goodbye. Have a great week ahead.